we've outlined here how, in the game of their money versus your sweat, their money, Chuck and Morrison Stevens money and the millionaires money really wins out. And the result is we've got a ridiculously unequal country, more unequal than we've been in 100 years. What are we going to do about this?
Great. Well, thank you so much, all of you, for having me on. And I really enjoyed that presentation. I've got a few thoughts for you. So why am I on this call? I think I'm the guy in this call who can sort of channel what the politics are of addressing the problem, of answering the question, Erica, that you just asked, because I do live at that intersection of policy and politics. And I've got some reflections on why the tax code has gotten less progressive and more complicated over time. And so with your permission, I'll just maybe give you 4 minutes or so of reflections on the human element. Politics are about how humans think about the allocation of resources and how they decide those things. So I'm going to put on my sort of anthropologist, psychologist hat here and tell you from the trenches what the human species does and how it behaves when it thinks about taxes. And then I promise you I will close with a couple of constructive suggestions. And then, yeah, let's have a conversation. So here's what this congressman thinks about human psychology and by the way, let me start by saying the work you're doing is essential, right? As the presentation just explained, we are in an economically tragic moment that is a moral stain on us. You laid it out beautifully, but I mean, this is in some ways about life and death. An individual who contracts COVID today, and that's millions of individuals, is 4 times more likely to wind up in an ICU if they are living in poverty than if they're not. That takes us from the realm of economics to the realm of morals in a very ugly way. And of course, it is politically dangerous to be in the world that we are today. I sometimes try to tell my Chamber of Commerce types and stuff that, look, if you like our democracy, you've got to think about the radical unequal distribution of wealth, of wealth where 1 person in 10 or 1 household in 10 owns 70% of the wealth in this country. That doesn't work in the long run. And we already see the implications of that, right? Let's not get into who supported who in the actual election of 2016, but it's sort of hard to deny that the 2 people who got the energy, the folks that really had the energy in 2016, were not the traditional candidates. It was Donald Trump, who was telling people that the system was rigged, and I'm going to bring back the coal mines. And he had this whole set of unicorns that he offered everybody that he hasn't followed through on. And on the left, of course, the energy was Bernie Sanders, where he was saying the system is rigged and the system is rigged. Without in any way drawing a parallel between those 2 people, understand that their messages were resonant and that our democracy cannot sustain the natural feeling of fairness that people have as they look at everything that you've been talking about. Okay, so back to psychologist, anthropologist me. What do humans do? Number 1, let's accept this, and please accept this, because a lot of the people on the phone call today don't feel this as much as my blue collar workers in Shelton, Connecticut feel it. But for the existence of the human species, human beings hate taxes. The Gospels wouldn't be written if human beings didn't hate taxes. Everything, humans hate taxes. Accept that. All right, that's been true for 5,000 years, and it will be true for the next 5,000 years. That has implications, but let's start there. Second, most humans celebrate success, and by the way, that's a fairly fuzzy concept. Close to half of our fellow American citizens believe that Donald Trump is a success. Now, you and I both know that he took a whole lot of money that he got from his family, and he lost most of it. And he took advantage of probably criminal and non-criminal elements of the tax code to basically blow that money more slowly than he otherwise would. But half the people in this country think that he is a successful guy. We have to grapple with that. But the principle that we have to remember too is that deep in their hearts, Americans value success, and they do things like look at CEOs and think that's a successful guy. And you know what? They're not entirely wrong about that. We could have a whole other conversation about how CEOs are paid, but we have to remember, so that's 1 and 2, Americans, humans hate taxes, and they generally speaking celebrate success. Now look, I can go into a union hall or a DFA meeting and I can pound on rich people and CEOs and it works, but most humans celebrate success. And we got to be a little thoughtful about that. Third, and this is the good news. I'm talking about deep fundamental values here. humans have a profound and overriding sense of fairness. And I was talking about 5,000 years of human history. That human history, in addition to hatred for taxes, has been driven by humans who will very literally sacrifice their lives in the service of fairness. And that's a real asset that we have. Finally, I'm here to tell you, because I'm already talking too long, humans have very short attention spans. And so we need to think about our message, particularly on things when you say the word tax code, the attention span goes from 5 minutes to 2 minutes. And that's a reality. Last principle of human beings, humans, and this again is sort of elemental. This is about the way people are. Humans form tribes to protect their interests. Again, it's been going on for 40,000 years. In Washington, D.C., we call those tribes associations. Other people call them lobbyists, and they are enormously powerful, and they are there to protect people's interests. So what are the implications of those sort of 5 observations from the field on what human beings do and how it affects their thinking about taxes? There was an interesting question in the chat. I noticed right before I started speaking, somebody was skeptical of the notion of simplicity. One of my overarching principles in this realm is to think simple. And I mean at least 2 things by that. Think simple in the way you communicate this stuff. And actually that presentation did a pretty darn good job at being simple. You need to tell this story quickly, appealing to the overwhelming drive that humans have for fairness. But simplicity in the tax code, and I'm going to address the skepticism in the question, is really important. Why? Because complexity serves the interest of those tribes and associations that hire lots of lawyers to pack the code with things that most Americans have never heard of. I would submit to you that fewer than 1 in 100 Americans understands what the like-kind exchange is. Well, the like-kind exchange, of course, is an unbelievable tax loophole that enriches real estate developers. Stepped up basis at death. You talked about it in your presentation. Did I just put you to sleep? Stepped up basis at death? I bet I did, and you guys care about this stuff. So we got to keep it simple because that's where the action is. Now, all right, let's talk about stepped up basis. Let's talk about carried interest being taxed at capital gains rate. By the way, I don't think any member of Congress has so many constituents benefiting from the capital gains treatment of carried interest. Did I put you to sleep yet? But I am adamant in my opposition to it because it introduces the complexity that favors the folks that can hire tons of lawyers in the tax code. Look, the other reason simplicity is important is that it pushes in our direction. I'm going to say something that some of you may disagree with in a moment, but if we have a simple tax code, it makes it easier to go to marginal rates as the discussion. And I think we make a mistake here. As sometimes Congress and Democrats in particular, we need to raise taxes on rich people. What we do is we raise the top marginal tax rate. And I say this to my colleagues all the time, and your presentation explained it. If you really want to go after rich people, and let's not use that language, if you really want rich people to contribute in a way that is fair to the society that has allowed their success, that's the way you say it, not go after rich people. You look at these esoteric things. I tell my colleagues all the time, you raise that top marginal tax rate, I can name for you 1,000 enormously wealthy people whose taxes aren't going to go up because they are paying capital gains by and large and taking advantage of all these loopholes. So I really do think simplicity in communication and an objective to simplify the tax code is really, really important here. Second point, and I promise I'm wrapping up here, conscious as I am that humans have short attention spans. We do need to combat the nonsense out there. And this is both outside and inside. The outside nonsense, the notion that taking the corporate tax rate from 35 to 21, which is what Donald Trump did, that was going to create jobs. Folks, I worked 12 years in business, right? And most people have some experience in business. It's not hard to tell the story that jobs are created to address demand. If a company is selling more pizzas, they will hire more people to make that pizza. If they have more money, they won't hire more people to make the pizza. They will give that money back to the owners of the company through dividends or through share purchases, as you talked about. So again, combating the nonsense is important. By the way, the nonsense that investment, that tax preferences for investment, which is how our whole tax code is built with respect to interest and dividends and capital gains, that is economically stimulative is at best ambiguous and probably not true. So it's really important that we be out there combating the nonsense, as your presentation did. Lastly, those associations. It's one of the darker aspects of Washington. I know you know this, that, and I remember in 2009, and again, no districts take quite so much advantage of the capital gains treatment of carried interest as mine. The real estate roundtable will be in every vulnerable member's office saying, this is not about private equity. Those private equity guys, look, private equity, we can have a long conversation, not a terribly sympathetic industry, as you pointed out in your presentation. But they say, oh my gosh, the construction, which provides thousands of jobs in your district, and it turns, it's turning Pittsburgh into a beautiful city, that the general partner needs to have a return on their sweat equity. They have a whole argument. And this is a much larger topic, well beyond the scope of here, but we've got to grapple with that if we're gonna take the tax code in the right direction. Lastly, my last point, and this is to human beings hate taxes. They do celebrate success, but they have an overwhelming sense of fairness. We do need to watch the way we communicate. Look, it's fun to make fun of retirees that are creating, that are playing golf and collecting dividends, and it's fun to make fun of somebody like Donald Trump or anybody else who inherited their wealth. But, look, Americans live in the real world, and they know that there are a lot of people who have inherited a little bit of money and are doing God's work. They're working down at the local food kitchen. They're giving away their money. And so we just need to make sure that we don't step on our own feet as we try to paint a picture for fairness. Because, even repurchases, right? I watched your repurchase thing, and I would say it's right. It is also true that while only 10% or so of Americans actually own shares directly in the stock market, the majority of Americans actually do, through pension plans or 401ks or what have you, own stock. And they, of course, benefit when shares are repurchased. That's not to say that you're wrong. Obviously, managers who are paid in terms of stock, they benefit pretty well. But my point is that we have such a good argument for simplicity and fairness to make here that we shouldn't just sort of out of emotional satisfaction say things that, number one, maybe sort of interfere with the lived experience of Americans, or number two, cause us to lose credibility. For example, on the repurchase thing, in a way, we want all of the loss of credibility to be on the part of the opponents. So let me stop there. And again, thank you for the wonderful work you're doing, and really kind of look forward to maybe in January, some success on these issues.
Bravo.
Congressman, I wanted to bring up one thing that you said. You said that in 2016, both sides of the political aisle, both from Donald Trump and Bernie Sanders supporters, were pushing on the fact that this economy is rigged kind of idea. Though an interesting fact, of those supporters, 80% of Bernie Sanders supporters and 81% of Donald Trump supporters thought we needed a political revolution. And so this tax issue is not, as we said in our presentation, it's not a partisan issue. People can feel that they're getting screwed and they're really sick of it. So let's turn to our questions. We have some fabulous questions in the chat. What do we need to make sure rich people pay what they already owe? Raising rates doesn't change much if they can decide not to pay and have nothing bad happen to them. And so just on those lines, I read somewhere that that $5 trillion is going to be not collected from the wealthiest Americans over the next 10 years. Congressman, what can we do about this? Because the IRS is grossly underfunded. Can you talk some about that?
Yeah, it's a great question, and it's absolutely right, and it's kind of technical. It's something that needs to be solved by and large needs to be solved by insiders. Because Americans hate taxes, they hate the IRS, and that's silly. It's silly. And you know what? Look, I can go in front of a group of people and say, taxes is what gives us, wonderful Medicare, wonderful Social Security, good schools, libraries, and I can make that case. But it's an inside game because it's so easy to beat up on the IRS. It's just so easy for people to say we should cut their budget. When you do that, of course, you are exactly as you point out, compromising your revenues. And you know what you're doing? You're also making it a lot easier for the IRS to go after people with simple tax returns than people with complicated tax returns, right? The amount of money you could probably get from Donald Trump is a hell of a lot higher than it is from that middle class couple in middle America earning $80,000. But it's a lot easier to go after that couple who can't hire a lawyer And it's pretty darn hard to go after. So absolutely, we need to fix that. There's an immense amount of money and fairness associated with actually collecting the taxes owed.
Just little side vignette. I got audited about maybe 10 years ago. The IRS ended up owing me $300. My auditor, seriously, my auditor told me that all the senior auditors were being fired and let go for cost purposes. So they really only have the people in the IRS with the skill set to audit your basic taxpayer as opposed to the big ones. So that's a big area for y'all and your colleagues. All right, so Congressman, I'll punt this one to you too. What are some things we could do to make the tax code better for working people other than just taxing the rich?
Okay, really, really interesting question. So most working people, of course, don't get to take advantage of deductions. And there's two reasons for that: the structure of the tax code and the complexity associated therewith, right? Folks who itemize deductions tend to be on the wealthier end of the spectrum and therefore get that benefit. So right off the top of my head, it's a really interesting question because we're talking about the big way you fix that, right? By getting people who are making more money to pay their fair share, you lift some of the burden on those folks who are working for a living and paying more than their fair share. That's the big answer to the question. But you asked for something more than that. So, you know, there's got to be a way to rethink, either through simplification of the standard deduction or of the deductibility of the 10,000 things that are deductible. There's got to be a way to rejigger that in a way that that would benefit the middle class and below. Oh, by the way, I'm sorry, I should have put this first. You know, where is in the tax code, an area that needs to be better mined, and there's a lot of people thinking about this stuff, is the unbelievable. Now we're not talking about middle class in this answer. We're talking about just below the middle class. One of the real crimes in the tax code is the failure to take up the earned income tax credit. I see this all over my district. I did some work in the Bronx on it. The amount, billions of dollars that are left on the table because people don't claim the earned income tax credit is a real crime. We're getting pretty esoteric here, so I won't elaborate on that. But if we can figure out a way to really commit the IRS or other entities to make sure people who qualify for that get it, we've just struck a real blow against poverty.
So let me say this. Let me ask one of our millionaires. How do I refute the argument that people who believe they should pay more taxes should just send a check to the IRS? Let me send this one to Morris. We get this all the time.
Well,
it's silly.
Yeah, if it was only my own personal taxes we were concerned about, yes, we could solve that problem fairly simply by sending a check to the IRS. But I'm sure, as the congressman is aware, that you can't run something and everyone doing whatever they want. You know, if we had a golf club up in Connecticut somewhere and we said, oh, everyone just send in whatever you think is appropriate if you want to be a member, well, that wouldn't work. You couldn't collect enough money. And the people who did send enough money would be very resentful of people that didn't send in any money at all. You can't run a country club that way. You can't run a country that way. I could easily raise $100 million to build a new concert hall at Lincoln Center, you know, and put someone's name on it. But it'd be a lot more difficult to raise money to build a new sewage treatment center at 143rd Street. No one needs to have their name there. Won't work.
You know, I can add a quick thought to that. I agree with everything Morris just said. I use slightly different words, which is, because, yeah, I hear it a lot. You know, look, the wealthy are enormously philanthropic. They send millions of dollars to this library in New York and this stuff. The way I frame this, which is pretty much what Morris was saying, is, and it appeals to our sense of unity and fairness. I say, look, taxes, I get it. You don't like taxes, but taxes are what we pay for those things that we choose to do together. You know, these are things, whether it's the military or the notion that elderly people shouldn't starve to death. These are the things that as Americans, we choose to do together. So yeah, if you want to privately give to pro-Israel causes or to the opera or to whatever, that's wonderful. Go ahead and do it. But one of the reasons we're great is because we come together as Americans and say, together, we're going to do this. And the only way to do together, of course, is to contribute to the common pot.
I want to stretch out this nonprofit question a little bit, and I'll punt this one to Chuck. Nonprofits have proved critical in the response to the pandemic and economic fallout this year. Have you thought about what taxing the rich would mean for charitable giving? and for the constituents who receive services from nonprofits. So Chuck, can you look at that from a global view, and then we'll kick it to the congressman.
I mean, the good news is people are privately stepping up and giving a lot more money to charities in this pandemic moment. But it kind of brings us back to the fundamentals here, which is philanthropy, whereas it's noble and we have a vibrant independent sector that we want to support. Philanthropy is not a substitute for a fair tax system and adequately funded, public resources at state, local, federal level. So, we could have had a much more robust public health response to the pandemic. All those weak spots and sort of the austerity of the last few years, where we haven't made enough public investments with tax dollars, is now showing up here. So it's possible that taxing the wealthy may reduce, some of the money that goes to the charitable sector, but it will substantially increase the money that goes to the public sector. 74 cents of every dollar that a billionaire gives to charity is lost tax revenue. And I think we want to get some of that tax revenue. And the other thing is, philanthropy is not democratic. It's not we together, as Congressman Himes said. It's not a we process. It's often an individual making a personal choice, and that's not sufficient.
Here's another one, Congressman. I remember when Paul Tudor Jones made a big show of leaving Connecticut when his taxes went up, and he headed for Florida. What's to stop other millionaires from doing the same?
Well, yeah, that's a disappointing thing. The answer to your question is there's not a lot to stop somebody. It's just awfully easy to do it. But there's two things maybe. One is, Connecticut and New York have high taxes because we care a lot about the quality of our schools and the cleanliness of our beaches and the efficiency of our roadways. And, when you move out of a community that cares about those things, you're moving to a community that cares less about those things. And the reason it's hard to do is because we're usually talking about the education of children. It's pretty easy to educate your children, pay your property taxes, and then say, okay, my children are done, so I'm off. Which leaves you with the other thing, which I must tell you is I'm not sure it's effective, which is to make that argument, and it's a hard thing to do, but you ought to feel a little iffy about raising your children in a community that comes together and pays a lot to make sure your children have the benefits of a community that cares about that. And then when your kids are off, you're gone and you're no longer on the hook for the next guy's children. Again, I'm not, that appeals to the notion of fairness, which I always try to return to here. But I'm not sure that there is a look until the states don't have, differential tax rates. I fear we're going to see this.
Well, people who want to start new businesses are doing it, in the shadow of the Flatiron Building over there, and in Connecticut, and in San Francisco, not in Kansas and Florida. Those are not places where you can hire talented people and start big new businesses. People want to be where states have facilities.
Let me interject one thing. I just left 40 years in the state of Tennessee, which has no income tax. And a lot of people from California are moving there for that very reason. I chose to move to the state of Georgia, where I'll pay 6.5%, I think that's a number, on my income in income tax to the state of Georgia. And a lot of my friends in Tennessee, are you out of your mind? You're going to move to a state where you have to pay income tax? Well, look, if I'm going to live here, I need to support the schools, the roads, and all the other infrastructure requirements of the state of Georgia. I'm not going to come live down here and call myself living in Tennessee just so I don't have to pay the income tax. Look, we're all in this together or we're not.
I think that's exactly right. All right, so here's a good one. How can we raise taxes on the rich when our political system leaves lawmakers listening more to their donors than to their constituents? I mean, one of the things that was fascinating in the lead up to the 2017 tax cut is that Republican lawmakers were saying out loud that their donors were insisting that they get this tax cut done. So, Congressman, what are we going to do about this?
Well, I think there's an inside game and an outside game. The outside game is what you're doing right now and thinking about how to tell this story of fairness to the American people and of everybody pulling their own weight. And by the way, this is a particularly good moment in history to do that because we just saw the one legislative quote unquote achievement of Donald Trump, the passage of a tax bill that was massively regressive and handed, 80% of its dollars to the top 1% in this country. And the Americans understand, they feel in their bones, partly for accurate reasons and partly because it comes, right on the heels of a pandemic. They feel that they got a raw deal there. And so we have a wonderful opportunity right now to say, so, how you doing after that the biggest tax cut ever, which, by the way, this is another comment about fairness. That tax cut was not a tax cut, right? That was a tax shift. Right. What Donald Trump did, he took $2 trillion of your children's money, because that's getting repaid someday. We don't welch on our debts in the United States. He took $2 trillion of your children's money and gave it to you. How do you feel about that? One of these things, and sorry, I'm now working a theme that I wish I'd worked a little bit. Yeah, it drives me crazy that the Republicans talk about tax cuts. You know what a tax cut is? A tax cut is when you actually cut spending and give that money back, or you raise taxes on somebody else. If you're not doing that, all you're doing is tax shifting. And most of what the Republicans talk about as tax cuts are, in fact, stick the bill to our kids.
Here's from Jonathan. How do we deal with the reality that, given Representative Himes' observation that people hate taxes, Republicans do so well by talking about doing nothing but cutting taxes and accuse Democrats of the opposite? Literally, the first thing all the Republican candidates who are running for state legislature here in Greenwich start their pitches with, I'm going to lower your taxes. Talking about raising taxes, even on the wealthy, is the third rail of politics. Thoughts?
Well, quick thought, and I've talked too much, so I'll just make this point. It's very, very hard. One premise I will disagree with there: the vast majority of the American people support wealthier people and corporations paying more taxes, and that's a pretty safe harbor for somebody who is up for re-election or election.
Excellent. So let's see, what's another one? All right, shouldn't we just have a flat tax? Isn't that the fairest way to set up taxes? Morris. Wait, yeah.
No. That means we currently have a graduated tax system with people with lower income having lower rates than some people, at least with higher income, although not investors. A flat tax means everyone paying the same rate. That would mean having more taxes on low income people and less tax on high income people. That would make inequality worse. That's the opposite of what I think we should do. I think a flat tax would be an absolutely terrible idea.
One thing about the federal system being more progressive is it sort of offsets the regressivity of state and local taxes. I mean, local sales taxes, local property taxes, local, taxes at the state and local level tend to be more regressive. So we kind of already have a flat tax if you look at the tax obligations, state, local, and federal altogether. And the only thing that keeps it, makes it fair, as Morris says, is the fact that the federal system still has an element of progressivity to it. It used to have a lot more.
Let me do a definition for those on the call who don't know. If it's something is progressive, it means it charges a little bit more for taxes the higher that your income is, because if you have $1 million, your million and first dollar is less valuable to you than your first dollar. And regressive is when you dump more of the burden onto poor people, either through sales taxes or fees and fines or that kind of thing. All right, we have about 1 minute left. Closing thoughts from our millionaires, Stephen, Chuck, or Morris. Any couple of final thoughts, Stephen?
I just want to say thank you, Congressman, for all you're doing. You're a voice in the wilderness out there, and I share your view. In fact, I've been telling all my friends lately, for you to not realize that the tax cut that we got and the deficit that we're invoking right now is that's a tax. It's just on our grandchildren. And people don't understand that. It's absurd, and it's so naive for people not to understand that. So thank you for your thoughts on that.
Morris, Chuck, any final thoughts? And then I'll just turn it over to the congressperson to
thank you, Representative. We're grateful to have you here.
Congressman, you want to close this up?
Yeah, well, Erica, let me just say thank you for doing what you're doing. I talked about the power of associations and lobbyists. We need a counterweight to that. We need people who are out there both telling the truth, countering the arguments, and supporting those who take courageous votes. Every once in a while there is an opportunity for people to do the right thing, and it's very, very hard to do so because, again, it's back to that first principle: humans hate taxes. Humans also hate having services taken away, and I suspect we are moving towards a world where the unsustainability of our budgets at the federal level, and quite frankly at a lot of state levels, are going to be called to account. And so the ordinary work that you guys are doing to tell the story, to steel the spine of people who believe that our country should be a lot fairer than it is going to be turbocharged a little bit sometime, I would estimate, in the next 5 to 10 years, when it's that old saying that if it's unsustainable, it won't last forever. And that's where we need to sort of double down, right? And we experienced a little taste of this back in 2008, 2009, 2010. And shame on us. You know what? Shame on me, frankly. I was brand new, and I was being promised that the deficits were so huge that that we were just 3 weeks away from being Greece. That America was going to crumble into ruins. And of course, what happened? We continued to run deficits, and interest rates stayed low. But that doesn't go on forever. And the reason I tell that story is because, in addition to fighting for a more progressive, a more fair tax code, and quite frankly, a fairer society, if and when that moment arrives, the next version of Simpson Bowles, or whatever you want to call it, we need to make sure that the underlying principle is one of absolutely protecting the vulnerable and the less fortunate, and those folks who, once again, are at risk of being stuck with the bill. We've talked a lot about the tax code today, but there are plenty of proposals out there to hurt those folks who are living on Social Security, right? And tax code is the revenue side of the engine, and the spending is important as well. So thank you for the wonderful work you do. Steel the spines of my colleagues. Get the reality and the truth out there. And let's watch for that moment when we may have to sort of rejigger a lot of our revenue and a lot of our spending, if and when it comes, to make sure that what emerges from that actually helps and not hurts the situation of inequality that we're all on this call to talk about addressing.
All right, great. Congressman, thank you so much for being with us. Thank you to everybody on the call.
Thank you.
Go to taxtherich.com if you'd like to learn more or sign up to be part of this. And if you want to host a gathering like this, we'll be happy to bring 3 millionaires along to talk taxes with a group of people. So thank you so much, Congressman. Thank you so much, everybody. Have a great day.